What do you think Narendra Modi should be doing to appease investors in his next administration, or this new administration?
Well, first of all, make it easier to invest. As you know, there's quite a bureaucracy when you want to put money into India. It took us 6 months to get into India with our new funds. So that's a long time. That's one thing. The other thing I think he should do is move ahead quickly on labor reform, labor regulation reform. As you know, there's a lot of problems when people want to hire more than 100 people in factories in India, and that has to be reformed and made easier. And of course, you have to be fair to the workers as well as to the people who are hiring them. That's the second thing. The third thing, of course, is all about infrastructure, because you've got 100 million people moving around the country looking for jobs. And I think your previous guest aptly mentioned the problems in agriculture in India, and that's the reason why people are out of the farms looking for jobs. So he's got to make it easier for people to move. That means better roads, better railroads, etc. And, of course, housing in the cities. So I think those are the key points as far as I'm concerned.
Mark, there's an old adage going back through the ages which has been said about India, that India has a great future, and in 10 years' time, it'll still have a great future. Now tell me, do you think that that maxim has changed now and that things are different this time?
Well, it has really changed, and that's changed for emerging markets generally. I mean, if you look at Brazil, for example, we used to say that about Brazil, by the way, and things have changed dramatically in that country, and the same thing is true of India. So if you look at emerging markets generally, since 1987, when I started the first emerging markets listed fund, we're now over 40% of the world market cap, probably 50% of the world GDP. And in those days, back in the 80s, it was a fraction of what it is now. So things have really changed.
When you look at India in the whole gamut of these emerging markets and frontier markets, how much weighting do you give to it?
Well, now, for a regular portfolio, I would recommend at least 40% in emerging markets because, as I mentioned, that's the weighting in terms of market cap. Now, I know a lot of people like to invest at home, particularly in the U.S. A lot of U.S. investors don't want to go out of their own market. The good news is that there are a lot of emerging market stocks listed in New York and in other markets in the U.S. that are emerging market stocks. So there's a great opportunity for you to invest if you don't want to go out of your local stock exchange. But at the end of the day, more money has to be put into emerging markets because that's where the growth is.
Mark, for India, where do you put your money? Growth is slowing. There are not enough jobs. The consumption story is dwindling. Where do you put your money?
I think the consumption story is very, very interesting in India simply because per capita incomes are going up. And you've got, 500 million people using the internet and having smartphones. So that's a big, big change. So you're going to see an acceleration, in my view, of consumer spending in India. So that's one place to be. Another place to be, of course, is in the technology area. Oddly enough, with this trade war between the U.S. and China, India could benefit in taking up some of the slack in the technology area. As you know, they're already great in the software area, but now there's a possibility of them moving ahead on the hardware area. And, of course, that's where the reforms in labor are very, very important for India.
The U.S.-China trade war, not a concern, not a risk for India because it is not part of that global supply chain. What's the biggest risk for the Indian market right now?
I think the biggest risk would be Modi pulling back on the reform agenda that he has. Of course, we know that there are going to be problems, there are going to be barriers. We know that. But if he can achieve 20% or 30% of what he's set out to do, that would be a giant leap forward. So I think the big risk, of course, as I said, is him pulling back or being blocked from achieving those objectives and those reforms.